the 4-hour price chart for Qualcomm Incorporated, stock ticker QCOM. So as we can see here, the stock is really trading under a very strong amount of selling pressure currently. We're seeing some rising trading volumes here as well, and most of these are posting in the negative direction. We have breached some very critical support zones here. So in this video, we will be watching for and identifying some specific price levels that can be used to identify trading strategies here going forward. So as we can see here, the share price is starting to break below some very important levels that can be found at, we can call this roughly 166.50. This would really be the price low that came in during the July 30th trading session. For the most part, the prior activity had been a bit positive here. We had actually seen price levels move all the way up to roughly 181.10, just below there. So we were seeing a fair amount of upside price moving here, but we did sort of catch resistance zones here at these moving averages, as we can see here. This falling yellow line here, the 20-period exponential moving average, did catch prices, and we did sort of reverse here and then break this key support level. So what we're going to do here is we're going to sort of drill in here, look a little bit more closely at this price action so that we can see how far prices are likely to fall here going forward. So, this week has been characterized by a large amount of earnings releases that have been reported by some fairly big names in the technology space. 4 out of the 7 Mag 7 stocks were scheduled to report earnings this week. And then in addition to that, we also saw names like Advanced Micro Devices reporting earnings. So there's a lot of earnings information that's being released here in a very short period of time. Google, Microsoft, Apple, Amazon, and Meta Platforms have all released earnings recently. And then we even saw Tesla not too long ago as well. So, there's a large amount of earnings information, and these are mega cap stocks. So, the selling pressure that can result from these types of reports can be quite substantial, and they can, sort of influence other stocks within that sector. So, tonight we do still have Apple and Amazon.com reporting earnings. If we do see a positive result here, I think that we could see a bit of a turnaround, even though we do see this support break here. We have had instances of false breakouts to the downside in recent trading sessions, and it's possible that this could happen again. But this is going to largely depend on the earnings results that are likely to be seen from both Apple and Amazon during the evening portion of today. So, however, if we do see negative numbers here, we do have to start to plan for the downside as well. So currently, share prices are trading at lows of this would be 164.20 roughly, just slightly above there. So if we do see a continued break further here, and we do see negative earnings results from either Amazon or Apple, we could really see prices continue to fall toward roughly 155.80. This would be the support zone that was generated during the April 19 trading session, and this is significant because we've already fallen through most of the Fibonacci retracement levels that have been posted this year. So if we look at this dominant uptrend rally here, really this is the rally that started to occur during the second half of April. Where we did see these lows of roughly 155. We can see that these extended all the way to the highs above 230 per share, which were generated roughly during the middle of June. So if we're using this as our dominant price move here, we do have to look at these downside retracement levels as potential support zones. And as we can see here, the 23.6% Fibonacci retracement, this red zone, was surrendered relatively quickly. We did fall through here relatively quickly, and then following this area, we did see some acceleration in share price momentum to the downside because there was this price gap here that ultimately did force prices through the 38.2% Fibonacci retracement as well. This level came in just above the $200 mark, roughly 201.10. And then, we didn't really find much support here until we reached roughly the 50% retracement of this move. So, in other words, it was this downtrend movement here, and at that point, we had lost roughly 50% of these prior gains. As this happened, the next level to the downside comes in at the 618 retracement, and then after this level was broken, the final level that we were watching to the downside came in at the 78.6% Fibonacci retracement, which is right around the 170.50 level. We did break this in recent trading sessions, even though there was a bit of a bounce here to the top side. That resulted in these gains coming in at roughly this would be these gains above 181. Roughly 181.10. So, the fact that we were able to, fail there so strongly and so quickly, this does call into question whether or not any bounces here are going to be likely. It's probably going to take a fairly significant earnings beat from Amazon and Apple to sort of reinvigorate the market and to lead to a turnaround in share prices. If that were to occur, then we would have to consider this recent break here to be a false breakout. But ultimately, we would need to see a break above this 181.50 level in order to sort of accelerate gains to the top side and to call a bottom in place. Because as things currently stand, this level does mark the 50 the resistance zone that's created by the 50-hour exponential moving average, as well as these historical price levels that did lead to failures previously. So, if we do see further moves to the downside, the level that I would really be watching would come in at roughly 155. This could be considered a potential buy zone, given the fact that this level was sort of the springboard for what came before it. So, if we did see a retracement back into that area, I do think that would be a fairly strong buy for people that are sort of looking at a medium term trading outlook here. Of course, this key level to the top side does come in at 181. So, if we did see a break above there, the only real resistance that we would be watching at that point would come in at this purple line here, the 100-hour exponential moving average, and then the 200-hour exponential moving average, which is the blue line. This blue line ultimately comes in at roughly 191.80. So this would sort of be the main level to the top side. If we were able to break above here, this would suggest that a firm bottom is in place and that we would be able to retest these prior highs. So here's the current market update for Qualcomm Incorporated, stock ticker QCOM. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.